This is Rod Kusanen, Spooman, for Risk on June the 4th. We've been trading the open. The trend is up, but we want to draw your attention to the PremThresh 10 workspace, and in particular this subgraph here, where we have the CFB, the very long CFB on the premium. And this has been trending down since the market hit approximately 1650. Pardon me. There we are, 16, not 1650. And that suggests that this is going to retrace. And it's going to come down to somewhere right in the range of 16 to 16 and a half, maybe 16 and a quarter. So we dumped our long trade in anticipation of this move down. The market's moved up to 3120, so that's a 4-point move. So
order filled.
If we get into this short, as this is trending down, and we should have really shorted it up here right as we were turning, and we may get that opportunity again. I'll average in. We should see this come down. All right, there we go. Right into 1625.
Order filled.
Okay. So there we made it right into 1625, all the way down to 16, just as we had predicted. Okay. Now, we want to see this turn. It will generally turn a little bit late. A little bit. But this really began to take off here. Okay, now it's starting to turn. We've set this indicator up in the easy language editor so that when the slope turns, we immediately are notified by the change in color. That's where the turn was, right there. But the way the premium works, it's really quite interesting, because as you see the slope of this indicator turn, what's so almost uncanny about the premium is that when this indicator changes direction, it basically means that, you know, whatever the market's doing is not really well supported. And so the tendency is for it to reverse. It works a bit like a fractal. And so right in there, as we were suggesting, right around 16, as the market moved up here and the premium said, nah, we don't really have much support here, then likely the market will move down and it will gain support again at approximately the same price as it was losing support as indicated by the indicator, and then the market, will resume its normal trend. That's cool. That's really very, very cool. And we pulled back again, and so we got stopped out, but we re-entered that long trade. We'll see if this doesn't really begin to turn right in there at around 16, maybe a little less, or a little bit more. We can see the premium divergent in here. Okay, nice, nice move up. Notice again, right in here, as this turned, okay, we're about to get our first profit target hit at 31.
Order filled.
All right, we're still holding 4 contracts. All right, what I wanted to point out right there, as this indicator turned. Now, notice the price, if TradeStation will cooperate, please. Okay. So right in here, as the premium indicator here was turning, price we were at that point was 1850. It does not turn back, to a positive trend until we resume at that price. Okay? Take note of that. If you're trading with the premium, notice that behavior. So while the trend was long, as you see this move here taking place, right within here are opportunities to get into the long trade, right as this is turning, okay? So that's why we went long in here. And then, again, right in there, it's turning, and up we go. So likely, yes, we're going to move up to the upper band here on the market profile to 23.25. But the high thus far in the day was 26.75. Now we're going to take a few moments here to point something out on the composite market profile that we think is a major, major concern. All right, so we mentioned this yesterday. This upper value area at 31.2825, it was 75 yesterday. It's adjusted down a couple of ticks. We've been as high as 29.50. That was yesterday. But the concern that we have is up here at 31.4725. This area above that level, as you can see, has very, very little volume. While this market has been continuing to rally, we believe that right up in this range, the market is potentially going to turn south. Historically, there was very little trading above 3150. Okay, so based upon that, this anti-gravity rally that's been going on may find that there is plenty of gravity for it to come down once we breach this area. And we could see a major reversal in this rally. We'll have to be watching the premium very carefully once we get up in that range. But we think this rally will continue. But once we get into the range of 3150, that's where we're liable to see a very significant move down. Watch the VIX, watch the premium when we get there. But that's a major area of alert. Let's look at this more closely. Now we just refreshed that chart, and the composite market profile from the low of August 19th, 2015 has now readjusted that upper value area to 3127. All the same, this is the composite market profile from that date all the way to the high and down to the low of the crash. And as you can see in this range here, we have very, very little volume. So we're going to expand that out. We're not going to use any other profiles because that's enough to really see just how significant this area is. So we drew a horizontal line right where the volume tapers off, and that turns out to be 3144. Okay. So typically, when the market is rallying into one of these areas of very low volume, it'll try to gain some support above this level, but ultimately it may find no further support, and back down we go. So we're moving up to the 3127 area as we speak. We're going to go ahead and take our profits on this long trade that we have been in. And so we're just putting our stop in at 3127. As it will likely move higher. Nevertheless, we don't want to be greedy. We look at the CCX indicator. That's developing a divergence here. So as this turns and hits the 3127 level, we're liable to see this begin to move down, at least temporarily. We have a long way to go. Again, the low of the morning was in the first half hour of trading, making the pattern of the day thus far, a red day pattern, but this is also a Thursday. And on Thursdays, the odds that the first standard deviation of the initial balance will be hit is pretty low. Okay, it's pretty low comparative to, or compared with, I should say, the other days of the week. And that first standard deviation mark places up at around 31.31. So if we hit 27, it's within a hair's breadth of that level. Let me pull that chart over here. So here's our chart. And that standard deviation line come on. Yeah, it's right around 31.5. So we could continue to move up there, but as we say, the odds are not in our favor for Thursdays. Now, it's very likely, that we're going to move up and try to at least tag the high of yesterday. But we just want to be conservative. And we'll take our profits up there at 31.27. But the technical side of this would be that, yeah, we're gonna at least try to make it up to 29.5, yesterday's high. So if you're a bit more aggressive, holding a trade above 31.27 for a couple of more points, so be it. As for me, I'm a bit more conservative. We can always get back into a trade. I'd like to take my profits at an area that I think is very, very, very likely that the market will ascend to or descend in the case of a short. And then if I'm feeling comfortable with getting back in the trade and holding it a little longer, yeah, so be it. But in this case, we've only got 4 contracts working at the moment. So there's not really enough there, in my opinion, to just take a portion of the trade off the table. I'm going to take it all. Now, as we're waiting for this to move up to 31.27, look at what happened to the premium here. All right, now, when we came up to the previous high at 26.75, you could see how the premium was divergent up there. We came down to a lower low here. Kind of a very minimal divergence in here. This is a 15-second chart. I'm not real happy with that. But what I'm really not happy with is right in here. Okay, see how we move down here to a lower low here. We may struggle to get back up to 27, where we feel it would be good to exit this trade. But right now I'm saying, oh, we may want to do that sooner, because this drop in the premium is not good. Not really very good. Yeah, look at that. Look at that. Oh, that's not good. hope we don't come all the way back down here. But that big bar on the premium here, all right, that was at 17, catch it, 1725. Okay. That's a big bar. Yeah, I don't like the way that looks. This is all suggestive that something's not quite right here. So we may just decide to dump this trade. Now we should be able to make it. Yeah, we should be able to make it up here. And then we may just go ahead and just exit as we see the, if we get a move up on the premium at or above 26.25, we might just set a limit order right there. So should the market pull back quickly, we'll just take our profits there instead. All right, so let's go back to our primary screen here. No, I don't like the way this is behaving at all. Not at all. All right, now let's watch this real closely here. Okay, that's turning. This is not good. Well, we may go at, ultimately it may turn. And in fact, now the way I'm looking at this, yeah, we've just about hit the zero line down here, and that should turn and give us one more push up. But this isn't good. Nah, this is just not good at all. We're going to come back down. Wow. I'm not much liking what's happening here. No, I'm not liking this at all. Okay. All right. Now the premium is pushing up. Okay. I think we're gonna make it. Well, I think right in here we thought that this was going to continue to push. Obviously, it didn't. All right. The fractal is turned. Premium is resuming. But we put in a protective stop at 31.20.50 because I really, yeah, I was just looking at this and saying, no, this is all negative, and was quite concerned that this was even going to go lower, and it just very well might. And we're back up into the band here. That's not good. That's just not good. So,
Order
wow,
filled.
I don't like it. I do not like it. Now, we may be able to get back in. We'll see what happens here. But let's go back over to the trend workspace based on our send charts. Okay. Something going on with the ES 500. Let's check that. Well, I'm glad we dumped that trade because the trend really started to change here. As you look particularly, we had to refer, by the way, this isn't accurate. We had some data feed issues. Anyway, the 5K ES chart, as we hit the high over here, 5K was already going negative, and then the 10K, right? 10K, slow K was dropping below slow D, even now, right in here, yeah, right in there. So we are going south. So I'm glad we just dumped that trade. And we can see it on the premium as well. So it looks like we're going to retrace all the way back to the VWAP at 31.12. Well, good move. Good decision. Okay, well, that's our video for today. Got to get on to other things. But keep in mind, just go back to what we were talking about previously. I'm sorry. Keeping in mind this workspace with the composite market profile, this area around 31.44. Now we just reran the market profile from the low in 2018. Yeah, the date was the low in December. We're running it from the 20th of December 2018. And I hadn't noticed it, but that upper value area was 31.46. Ooh. Now, if that's not a target, I don't know what is. Oh, yeah. So it's going to be really above the 31.44 number because it'll breach 31.46, but that's when it's liable to stop. Let's, just for grins, let's look at the other dates here. And from the low of May 30th, 2019, that upper value area is 31.4725. Now, I don't imagine that this is going to give us, yeah, that's not going to happen. All right. So 31.27. Okay. So back to the low in May of 2019. That's where this upper value area is. Now we've got a really clear target there. So with that thought in mind, let's continue to watch this this rally and be very cautious above that level, 31.4725. All right, I'm Rod Kusin and Spooman for Risk.